How are you?
Great. Ready for another week.
Yeah. All right, everybody. It's Monday. I don't know what the date is. August the something. What day is it? I don't really care. August 15. Welcome to Snipers Live Trading. Let's get the disclaimers done. Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Don't trade with money you cannot afford to lose. And this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Please read the balance of the disclaimer if you so choose. All prices are in US dollars. Let's hop right in and start talking about the markets. And let me just give you this slide one more time. These are the futures. We don't have access to the market data currently in Tom's tools because the market's not open yet. The futures market is, though. We're going to take a look at the futures and kind of do a quick scan across the various markets and see if we can ascertain where the markets might be going next. I think what I want to do is start with the Russell 2000. The symbol for the Russell 2000, and the reason I'm starting here is because we have not an Iron Condor, we have a long-term out of the money call credit spread right at 2000. And on Friday, the Russell breached the high of its high of the day, closed above the 200-day moving average. And in my own personal opinions about what to do with this, it was to wait for there to be a solid close, and that's a very subjective term, solid close, but wait for a close above the 200 and then perhaps consider battening down the hatches. Now, what I did in my own, I don't have this trade live, but when I looked at this on Friday, I'm looking at this trend and I'm like, man, I want one more close above the 200-day average. I'm really, that's what I said. I'm not going to batten down the hatches on this one. We also have a bullish broken wing butterfly on the XSP, which tracks very well the Russell 2000. And so we're in this this area here, and it kind of to speak to my own personal experience with losing credit spreads, I freaking hate it. And it comes from 15 years of solid credit spreads. They work most of the time, but when they don't, it can be painful. You have to be willing to take bigger losses than some of the other strategies that we use, and you gotta have some, like, you can't flinch, And I was thinking again about what we said last week, or what came into the mastermind. Let's just call it came into the mastermind, was this idea that successful traders, those that are successful, are detached from, to the greatest degree possible. We're human beings and we get attached and we want specific results in life and trades. So we want that. We have desires, but to the greatest degree possible, become detached and then just react based on what you've accomplished in a back test. And it really came clear last week when I was thinking about I've coached at least 100, probably 175 people, 200 actually, if I think about the others I've coached outside of Tom's community. So 200 people or so. And the process, it's pretty common for somebody to take basic rules, go back in history, back test 100, and get really great results, including losses on some of their trades. And one of the reasons that I think, and then as soon as the real world starts, then it seems fairly common for all of that to go out the window, and then for panic and reactions and over adjusting and exiting too soon and having an emotional experience kicks in. So why is that? Well, when you're in a back test, you're in a simulator. You're literally playing a game. There's no direct impact on your money. You're not losing or making money, and you can be detached and you can react and follow rules. So we want to get there somehow. We want all of us as traders want to get there to be detached from your trades as much as possible. And this occurred to me over the weekend. One thing that really I don't think I haven't emphasized. I don't think any of us in Tom's trading room really emphasize this, but it's really critical, and it's critical if you want to remain detached. And that simply is to practice position sizing, like really do it. 2-3% of your total trading account to be allocated to any particular trade. Now that's a rule I've violated my whole life. I've got to be honest with you all. I violate that all the time. But I would say on broken wing butterflies, for me, no problem, because we can manage that risk. But credit spreads, this of all the strategies that we do, this is a great strategy first off, but in order to be able to detach and react and batten down the hatches or broken wing butterflies, to do what you practiced in your back test, when you come to a live account, of all the strategies, credit spreads, you need to be very, very hard fast about limiting your risk in those trades. 2-3%, I would say, is the average. I'd love to hear some thoughts from all of you about what I just said. And are you, maybe we could just do a little bit of opening the kimono. Who in this group, you can raise your hands if you like, or you don't have to respond, of course, but who's practicing proper position sizing in their, let's just say, credit spreads? Okay. Andrew's laughing. Okay, David, Robert. Yeah, Robert. You are. Andrew, you're laughing, right?
Mike, that
yeah.
Russell 2000 trade, no way could I've ever gotten anywhere near it. I have a $500 limit.
All right.
I tried, I put in one saying, well, this one it's so far away. How could it possibly do that? And it did. So, I'm not going to be doing Russell again for years.
Yeah.
I don't care what it does.
So, Mike, it seems, though, that you have a 4% limit for credit spreads, because we do $1,000 trades, right?
Yeah, I do them for, I pick a position size that's not based on your individual portfolio sizes. So it's generally, I'll do 500 for a broken wing butterfly and 1,000 for a credit spread. Those credit spreads, because you're only taking 15% in, they often have large risk. So I'm not, maybe I need to come up with a position account size and then go through this part of the process, because I haven't been doing it, to go through the process, say, all right, this is my account size, this is my position size, and just apply it that way. I mean, it's really been sort of left in your hands to decide your own position size.
Well, it's great when it works, but when it goes the other way, that risk, man, it kills you if you're not being disciplined about the stop loss and whatnot.
Yeah, that discipline is what goes out the window, when you. But here's what you have to do. So just to kind of wrap it up, be sure that, especially on credits, and I would say more loosely on broken wings, because we can manage the risk on broken wings like no other strategy. But I know that when I know them all, and it's the easiest, most brute force way to move risk around at will. So I'd say there you could go a little higher than 3%, but for everything else, particularly credit spreads. You got to be really careful with that. Now, with that in place, then you get a losing credit spread. You're not going to take max loss anyway, but you have a losing credit spread. You might lose 1% of your total account on one trade. With that, sit in that context and allow the rules that you've used in backtest, all of you backtested 100 times, each strategy, and then, and then sit with the rules and do the rules. Detach, react, detach, react. It's essential, I think, and your your experience as a trader will be a lot better. So here we are on the Russell. We'll come back to the Russell, all the trades here in a few minutes. So the Russell is, it's broken below the 200-day average. I don't know where the markets are going from here. This has been tested. I even hesitate to say I'm expecting it to drop, because I've been saying that all the way up here, like a lot of us, and like a lot of the industry pundits as well are shocked by this move. The Jamie Dimon article said there's a good chance of a recession in his mind, and it's another opinion from another human being. Who knows? He seemed to. What I did get in the article was he seemed to have a high degree of integrity. He made reference to having two near-death life experiences. And I was thinking, I've had two of those myself. I was scuba diving in Costa Rica, in Cozumel, about 100 feet, and I just seen the movie The Abyss, and I was at 100 feet, and I couldn't get any air out of my regulator, and I thought I was done. I really did. I thought I might die. I was able to get out of the situation. And another time, I was in New Zealand on a mountain, on a volcano that was pretty young, geographically speaking, and this big boulder came rushing down towards me and bounced on either side, and I almost got hit by this massive boulder. And that does things to people when you have those kind of experiences. It kind of helps you detach a little bit, I think, build some integrity, I think, as well. And yeah, anyway, so it was a good article. I would recommend reading it. It's in the post in the WhatsApp feed. So here we go. Let me just do this real quick here. I checked this earlier, but let's see if there's anything going on CNBC. Oftentimes there's really nice information here and opportunities sometimes, but I like CNBC's and Bloomberg's as well, because it's quick hits. It's top news stories, and the biggest news story: stock futures fall on slowing China economy concern following we had a whole month of S&P gains. So China's is in the news and its impact on the rest of the world. Chinese tech giants share details of their price algorithms. Apple, Dollar General, Amazon, Disney, Peloton. So we could look there. Starbucks asked labor board to spend mail-in, blah, blah, blah. I don't see a lot of big news this morning, really. Now, last Friday, John, I know I'm off track a little bit. J&J, J&J's is getting hit by a lot of lawsuits for their baby powder. They're being accused of the talcum powder that in baby powders is the talcum in that powder is causing cancer. So the stock's taking it on the chin. The rest of the pharmaceutical stocks didn't really come down with it, just Johnson & Johnson. So we'll look at that one a bit today and see if there's anything we can do with that. I know some of you have already looked, so if you have any ideas, just speak up. Here's Johnson & Johnson. And so it's coming down hard because they're going to stop selling one of their products. I mean, that's the main reason for it. What happens in the lawsuit, we shall see. But, this could be a nice little bear call spread, preferably at the high, the most recent high, but we got lots of resistance here that might be good. So we'll come back and look at that one in a minute. So let's go look at the rest of the markets. The S&P 500 didn't quite hit its 200-day average. All the futures are down right now. It's down a little bit today, but certainly you would have to say the trend is up on both the Russell and the S&P 500. Let's take a look at the Dow /YM. Same pattern everywhere. Let's look at the NASDAQ. Yes, again, same pattern, strong resistance right here at 13,500 or so is a nice resistance level. But again, trend is decidedly up as we speak. We have retailers earnings coming out this week as well, so we'll take a look at that in a minute. What else do we have here? Let's take a look at Bitcoin. Was anybody in the Bitto trade from last week? I let that one expire. I'll talk more about that one tomorrow. I started off as a butterfly. All right, so Bitcoin is hanging out around 25,000. Oil. Okay, oil's dropping, everybody. So that trend is decisive. I mean, it's definitely a downtrend. We've hit the 200, coming back down again. I wouldn't be doing anything bullish on oil. Heck, I don't even know if, oil could certainly recover. It's hard to know, but there's some decided bearishness in oil. If you have bullish trades on oil, maybe time to think about adjusting. Let's look at gold /GC. Gold's looking pretty good. I mean, it's now above the 50-day average. It's down. Futures are down right now. Let's see what the US dollar is doing. Yeah, the US dollar is stronger. I don't have Forex on my Thinkorswim account, so I can't actually look at the US dollar pre-market. I don't have the futures activated, so I can't see it. But I'm assuming that with gold coming down so much this morning, let's find it. Where is it? /GC. That it's most likely the culprit is the US dollar getting stronger this morning. So there's gold. Let's look at bonds /ZB. Yeah, bonds is hanging. It's I like there's not a really pretty one, but there's an upside down head and shoulders pattern here. Let's call this the neckline, shoulder, head, shoulder, a break of the neckline, 14,000. If that break continues, expect to move from the top of the head to the neck. So let's call that 142. So expect like a 12-point rise. If the pattern does come to fruition, expect a 12-point rise from the neckline, 142. So that would be 154 is what the head and shoulders pattern is forecasting based on the basics of head and shoulders patterns. I don't know. I mean, we got interest rate hikes happening. They seem to have pulled bonds down. Now they're popping back up. So yields are rising on bonds and they are becoming more and more attractive. So that force is also acting on bonds. Don't see any risk off though anywhere. I don't see risk off here. I don't see risk off in gold. So that's a general feel of the market. Let's take a look at the economic calendar for this week. And you can go there by going to Market Watch. I'll post this in the boards. Hold on a minute here. We post this in the WhatsApp thread here. Hank's been busy. Okay, so if you want to check you can find this information in other places, but this is the format I prefer myself, but you can find them elsewhere. We got housing reports coming out on tomorrow morning. Building permits, housing starts. So maybe keep an eye on retail, on real estate, XLRE. Let's take a quick look. Could see some movement there. The housing market is slowing. So we should see evidence of that. And yet the housing market is rising. The stocks are rising in that sector on balance. Those in the XLRE anyway are rising. Keep an eye there. Retail sales is coming out this week. We also have earnings, jobless claims on Thursday. existing home sales, more home sales data on Thursday. And then we get Richmond Fed Tom Barkin speaking. So we could get some movement in the next, I'd say Tuesday through Thursday, we may see some movement. So let's keep an eye on those reports. Let's see, what else do I have? Sector tracker. Everything's green, man. 1 month. I went to tools, sector tracker. And then I'm looking at sectors for a month. The hottest sector, consumer discretionary over last month. Let's take a look there, XLY. Okay, well, you know, we're going to see these sectors are going to look a lot like the overall market. Let's go for 5 days. Over the last 5 days, energy was the most bullish. Let's look at that, XLE. Yeah, the energy stocks are rising. The other thing to look at, and I mentioned this last week, is the green energy sector. And I built a list. I posted these stocks right in the live feed, but I've got a list here of green energy stocks.
Yeah, Mike, I was going to ask you about that. I know doing credit spreads on green instead of broken wings, potentially.
Yeah, no, totally. Yeah, we got 2 of them here. This is the one. I'll post this again to make it more accessible. But it's in the thread, but I'll just give you the list again. Green energy stocks. There you go. So that's just the top 7 of those ETFs with their component stocks. We also have AG in here. We talked about that as well. That came up out of the way I copied them. I don't know for sure that it's Majestic Silver. That's not a green energy company, so we might want to take that one out. Let's look at some of these. ICLN is one of the green energy companies, or ETFs, ICLN. You can see here, really, really big movement up there. In fact, what I'm going to do now is let's just go into stock charts. And what you can do in stock charts is you can say, select this list, and then you can move through stock by stock, which is kind of cool. Let's do 60 days here. And so now all of the stocks I just copied down in the thread are listed here, and I can move very quickly through them all by using this little button there. So you just move through your list.
Hey, Mike, I was looking at a SPWR
Yeah,
put
Sun Power.
bull print.
Yeah.
Based on what you said last week, I found a SPWR bull put spread. The only challenge was that it was out 126 days. So I don't know if that violated our rule of 60 to 90 on long-term credit spreads.
Go ahead.
It was 52 was the earliest, 126th. So I figured, I wanted to ask you about when obviously they're skipping during the holiday months, if 126 days on a credit spread is way too long. Do you think?
Yeah, I would say yes. And the reason is a lot can happen in 126 days.
Yeah.
And even 90 days for that matter. So I'd be a little hesitant to do that. What's your strike price on it? Your short strike?
I had sold the 15, bought the 13.
Oh, yeah.
December 16.
Let's build that real quick here.
But, the only other thing is you mentioned to us, and it seems to be true, that most of these are lasting somewhere north of around 40 days. So that's why I wanted to ask the question, even though it's 126, it looks like a successful credit spread, as we've been talking about, usually, closes out a lot quicker than the expiration, relatively speaking. So.
Yeah, and that's really critical that you don't hold on.
Right.
That rule about buying back for 10%, that might seem like a lot, but But if you're holding let's say you're holding $1,000 and you took in a 200 in credit or something, or 150 in credit, and you get down to 90%, and you've got literally, you're waiting another 45 days on average to make 10% on 1,000. It's not smart use of your capital. And so really that rule is about shortening your hold time such that it is 45 days. Otherwise, it's going to be 90 days or so average if you let it expire.
It's worked out great for me. I haven't had anything go more than 43 days. So
Yeah. Well, what I do like about your trade though, I'll have to widen the strikes there. I didn't get them all. Let's do this at 13. Is this the trade? 15, 13?
Yep.
Okay. What's really great about it though is your break even is down here.
Right.
14 is even better support, but you're quite a ways away. Probability of profit is 90%. To make 13%. You know,
Yeah,
that in of itself.
last week it was 10%, so it's gone up now. So
Yeah. Yeah. Now, when we're going to look at our live trades here in a minute. So I don't dislike this one. I would like it even better if I was able to put a bearish broken wing butterfly on this trade now, today, in the beginning.
interesting.
Yeah. And I'm going to highlight that when we get into the Russell trade. And part of the
Mike,
reason.
one comment.
Yeah.
The big thing I see when I think in terms of real long trades like this is, when is earnings? And I see this one is November 2nd. So the big concern I would have with this trade is, if you're not out 4 weeks in advance, worry about IV destroying your trade, because it's going to drive the price up and it'll cost you more to get out. So that's probably the big watchdog on this one is,
but
get out
Andrew, the only counter to that is that my average trade is just north of 40 days. So if earnings is out 82 days, I really don't care, because with the 10% buyback, I'm usually out long before the earnings. So that's why I look at these trades as being viable, because I'm not holding it for 82 days.
Granted, it's just, if something happens, you know, when the unexpected happens, if you get to October and you haven't been able to get out like you would expect, then you need to be concerned about earnings. If you get out earlier, great. I mean, that's the plan. I'm just talking about the downside.
Yeah, and that is.
I agree.
But that's going to be ever present. We have 90-day hold time. It's going to be rare that you're not going to have to contend with an earnings announcement.
Can I add one thing to this? When we looked at the option chain, it looks like next Monday, the October strikes will be released, right? Going up.
That's true. Yeah. Yeah. Thanks for making that point. So yeah, I would say you could wait till Monday. You know, the expiration, it's expiration Friday this week. And when that happens, then you'll get an extra set of options. Yeah, good point there. Right here, we'll have an October on Monday. So perhaps that would be maybe waiting till then. You can get a little more, you know, you can get a 90-day option versus 126-day option.
Yep.
Which is good. Yeah. Thanks, Paul. That's a great comment. All right, let's take a look at the market's opening in 2 minutes. Let's take a look at our portfolio. And the one that's screaming is this one on the rut. Okay. The rut is down today. We're at 50. We had a 50% loss by waiting for the stock to get above. But here's what I wanted to show you. You know, this whole idea of detaching and allowing the losers to be losers. That's our game. We have to lose. It makes it easier to detach and to give yourself a bit more time to react by throwing on a hedge. And so we put this one on. Let's see, we put it on the 9th, which was that was last week, of course. And And you can see here that if the, and this is only a 28-day trade, if the rut continues, then we're going to make some money back up here. All right. So I'm okay with waiting a day or two. I want to see. I really trust support and resistance. And we're
Mike,
off.
that risk graph was XSP, not the rut.
That's correct. And that is exactly correct. And what we discussed last week was we found an instrument that was correlated to the rut. And if you look at the XSP, it's correlated. Yeah, so that was in the video last week. If you missed that part, please watch it, because I took you through the process of, putting on these broken wings. You're not going to always find them on the stock you're in. But if you happen to be focused on indices in particular, the market indices are highly correlated. So yeah, we have a rut trade here and we lost 920 on, and we made 72 bucks on the hedge on another stock that's also correlated. You can see it very clearly. If I was to put in the rut here and then do an overlay not paired, XSP. So that after that in my experience was an epiphany last week. Detach and React, that just came out of the ether, and I was like, oh yeah, that's what we need to do. And that's why look at this correlation here. Same stock. I'm okay. Yeah. So this XSP is going to move up and down with the rut. So yeah, I don't have a broken wing butterfly on the rut, but I have a stock that's highly correlated. That's gonna take care of us if the stock continues to rise. So what this allows us to do now is to be a bit more patient. Here's what sucks about battening down the hatches. What can suck, and it sucked for me on FedEx. Now I would do it again. I would definitely do it again. But here's what sucks. The stock rises, hits resistance, falls back away, ends up falling down, and your credit spread that had you just left it would have been a profitable trade. Anybody had that experience? I have. And with this, I'm like, all right, yeah, if this thing keeps rising, I've got a good $600 potential profit here. And my current loss in the trade is about 920. I can batten down the hatches and get that more contained, but I can wait. I can be a little more patient. I can be more detached, and I can then make my adjustments, because I am making some money back up here. My theta on this trade is still positive. My theta on my broken wing is positive. That theta will get even more positive up here. As the stock starts to reach this short strike area here, the theta will get even more positive. So I'm okay right now. I'm going to wait. I want to see. I want to see this 200-day moving average firmly breached. And for me, that's about looking at maybe a round number 2025. Give it a bit of time to see if it's really and truly ready to take another bullish leg above the 200-day average. This is a line in the sand for institutions. When they intend, they use the 200. If they're not bullish, then they tend to live below the 200. If they were really bullish, really and truly bullish, and there's reasons to suspect that they might not be, then they're not going to continue to lift the markets above the 200-day average. They could do either. I don't know what they're going to do. My leaning still remains that it's time for at least a correction, and maybe that's happening, but I'm going to let this sit for a little bit. Okay. And then when it's time, I'll batten down the hatches. I'll tighten the spread, the upper spread. I'll throw in a butterfly or complete the butterfly. And then maybe even do this, maybe, you know, imagine, let's just do it real quick here. So here's the move to batten down the hatches. Okay, so let me duplicate this. I want to look for some trades here too. I got to save some time for that. So what I'm going to do here is drop the 2020 call down to 2010. I like to put them in order. It's easier to read. My expiration date is September 30. I think I have one, right? Yeah, I just got one. Okay, so this is contraction. My color coding is red for contract. And then I'm going to buy a spread underneath. So I'm going to sell one September 30. You can do puts or calls, doesn't matter. It can matter a little bit, but for now, I'm just going to do puts. You can swap calls and puts in any spread, and it's the same risk graph. And then underneath, I'm going to buy the 1990. And since I'm completing a butterfly, I'll give it a different color. Okay. So that'll contain us around $1,000 of max risk. Max risk is now 940. And my delta, the slippage is a little jacked up, but the delta will be, once I get, this is Friday's data. So if it's today's data, we'll get more accurate slippage and more of a delta neutral posture. So then I've contained my risk. Imagine this, does this increase your level of detachment? We know you've limited your risk in the trade to 940. And up over here, I can make, you know, I got a good shot of making $600 of it back. I can still adjust my butterfly later. I can take off a wing and do lots of stuff. So I can still be adjusting this trade later. And while I'm doing that, I'm making money on this one if the rep continues up. So what does that do to your detachment level? All right, it's as bad as it's going to get in my credits, my originating credit spread trade. And now my game becomes make it back on a bullish broken wing, adjust, the stock starts dropping, pull off the bullish wing, and then let the credits, the resulting contracted bear call spread make, let's say, I wouldn't say necessarily make money, but certainly lose a whole lot less. So this is the game I like the best. Now, the other side of it is from here, we could put on a bearish broken wing butterfly as well. Why not? Let's see what's there. I don't know what's there. And because I know that the market indices are correlated, quite correlated, highly correlated, I'm going to go ahead and just look for a bearish broken wing butterfly on the market indices, index options. And let's just see if there's any credit or zero debit ones. There's none that are free. Standard, I'll pay a little bit. And there are some, and look, on the top of the list is an XSP trade. And there's a lot of them. All right, so we already have a bullish one. Let's sort by probability of profit. Okay, we got a slippage is really tight on this. Notice the slippage is very, very tight, which is awesome. Let's take a look at the expiration date of our current one. It's a 28-day butterfly. We don't have to match them up, but a little bit more time would be good. Again, your directional prognosis has a lot to do with how much time you want to give yourself, also the cost of the trade itself. This is a $22. And let's see, you know what I'm going to do? I'm going to sort by open credit because I want to keep my costs down up top. Although that is being curtailed by the bullish broken wing that we have. And so let's see. Let's try to match up the date just to make it easier to. So here's one, 28-dayer. This is a 28-dayer on the bullish side. And so I'd want to do a bit more work to find the ones I like the best, but I don't know if I like this one because the break even is pretty close. Let me zoom in so you can see what I'm talking about. Let's go 345 to 475. To 475. There you go. All right, if there's a retracement, I would expect there to be some support level. There are support levels there at the top of those peaks. There's support at 410. And so now I have this trade that's helping me profit in the event the stock drops. I've got this trade that's going to help me if the stock rises. And then my risk is contained to $960 or so. This will be less today. Once the data hits Tom's tools, we'll actually have a better max risk than 940. So that's the idea. I'm not convicted that this is the one I want. Let's see. 38 days, 33 days, 31 days. I'm just looking at my probability of profit. Okay, the one I have, I think, is the one I want. So let's go ahead and put this on. And then of course you're going to manage this one as well. If the stock keeps rising, contract the risk up here. So you have 3 trades to manage now if you decide to go this route. And if the stock starts to collapse, then contract this risk here, stick it up there. And so now you have a, you're now in a boxing match. You got 3 trades. And the idea is to make your money back and break even, if not make money. Are there any?
Yes, I had a question, but he's gone. Or is that me?
No, he's gone for me as well.
All right. Well,
And
anyone, what do we think about position size on either of these two hedge things?
well, the other one was a 484. So I don't know if that would turn, we'd end up with something similar in terms of the size, because I don't remember. The other one was also an $8 cost entry. This one's more. So I suspect that we're going to end up with a lower number if you're looking at the same kind of risk reward. Well, all of Costa Rica is not down. I see
Yeah,
Gerardo.
he just sent me a message. He lost his connection, but he's coming back now. It's the problem of being in the middle of the jungle.
Oh, I'm up in Maine at this point. Normally I'm in Massachusetts. As you can see, there's trees behind me because we're on vacation.
Oh. There you are.
Maybe.
It looks like.
Needs a satellite feed.
Got the slow-mo going on.
So I'm going to stop my video to keep the data. Gerardo, am I back?
Yep, we can hear
Okay.
you.
Okay, good. All right, so where I was, let me share my screen again, is we're gonna surround this freaking trade with butterflies.
Hey, Mike, it's not
We already
working.
have a bullish one that's making money. I'm gonna go ahead and I'm gonna wait for tomorrow. Okay. Let me reconnect to something else. Okay, how about now?
We hear you.
Oh, good. I'm sorry, everybody. It's part of the Costa Rican lifestyle.
And nothing you can
Pura
do.
vida, don't worry about it, man. It's all right. It'll come back.
And then what about your screen? Is that going to come back?
Yeah, there you go.
Okay, we're good.
All right. And so the basic process, batten down the hatches, contain your risk. You can stop worrying about this one and then throw on a bullish one that's already making money. I want to adjust this one, see what happens. And then I've got a bearish one, same expiration month. And this is the idea. So you have a really good shot. You've contained your risk. Where is it? Right here. You've contained your risk. You're making money. If you're going to make money if it goes up, you're not going to lose any more money on the butterfly, the balanced butterfly, and you're going to make money if the stock drops. Now, how many of these do I want to do? Let's see. Let's do 10 of them. My max risk could be 1,000. And so then I can make 1,200 there. Now this is, so I've already said to you that you want to be careful with your position sizing, and broken wings for me is one where I know I'm not really going to experience $1,100 of risk, but you could. It's possible that the rut is down here at max loss, but you know, if it moves somewhat reasonably, then we're going to be able to contain that risk. So what I really want to do is try to make as much money back on the downside as possible. Ideally, you cover your total risk in the trade, which is what let's say it's going to be $900 or so. Once the data gets refreshed this afternoon, it should be about that. But let me just go ahead and do 10 just to get this on. Let's see, I'm going to do September 9. Let me go into Thinkorswim simulated trade. And I want September 9s. I'll post this on the boards as well. September 9s, let's go for butterfly. And then my mid strike's 414. Right there, buy it. I'll do 10. And I want to do the 419 and 408 above and below. 419 above. 408 below. 17 cents debit. How many do I have over here? Let me balance these out. On this one, I've only got 4. Let's do the same number. That gives me 500. I'm going to do a few more. Let's do 5. That way I'm putting the same amount of profit on both butterflies, although that's not a requirement. It's a looser game. You know, you have to just play around with it a bit. I like that. This is a good example where we're going to make a good $600 back here if the stock starts to drop. And so let's go for 5 here, just so I can balance them out a little bit. 17 cents debit. You check again. 419, 414, 408. 419, 414, 408. September 9. September 9, 18 cents debit currently, confirm and send, send. I'll let that sit there for a little bit. All right, we got 11 minutes before the top of the hour. Let's take a look at some of these other ones. Excuse me. All right, the other ones, the other credit set that we have here, we have one on GM. And I'm going to say the same thing that I've been saying. So GM, let's look at a live chart of GM. What's it doing this morning? Yeah, we got strong resistance at 40. Our short strike, 40. Yeah, on this one, same as before, I want to look for bullish broken wing butterflies on this one. And then I can just give myself more detachment to not batten down the hatches so quickly. 40 is my level, above 40, then we batten down the hatches. And then right now, though, I can go ahead and start looking for bullish broken wing butterflies on auto companies or anything that's correlated with GM. So auto companies, maybe even the Dow. Let's just take a quick look. Is GM? I'm thinking GM is probably pretty correlated with the Dow. GM. It's a Dow stock. DIA update. How correlated are they? They're pretty correlated in terms of movement. Anyway, recently. So literally, you could start looking for bearish broken wing butterflies. Bullish broken wing butterflies on GM. It's that not moving as enthusiastically as GM. The market is outperforming GM, but it's pretty much moving in pretty good lockstep with the market. So literally, I could say, all right, well, let's just go for searchers. Let's take a look and see if we can see any bullish broken wings on the ETFs, REITs, trusts. I mean, you know, I should check for GM. I didn't even do that, but let me come back. I'll come back to that. Short Qs is reasonable. Hey Clayton, here's your TAS. This is the bear, so we don't want a bear. We don't want any of these bearish instruments. We try GM. I don't want to spend a lot of time on this. I'll let you, maybe the group.
I already checked GM, there's nothing.
Nothing on GM. Okay, thank you. So just so I can get some other trades off, I'm going to let the group work on that. So I guess the group assignment would be for some of you to look for bullish broken wing butterflies on GM. There aren't any right now, or anything that's correlated. The ETFs is a place to look. You could also look for index options. Heck, maybe the XSP. And do some more XSPs. Let's do standard bullish. Yeah, none. All right, so I'm going to let you guys guys and girls work on that. All right, the other ones I'm not worried about. Walmart, bull put on British Petroleum. British Petroleum, plenty of room, nothing to worry about there. And oil is coming down. Let's see what British Petroleum is doing right now. Yeah, BP is down big, it's gap down. See that? So nothing to do on BP. I've dealt with the biggest issue we have. That's when you're doing your trading, you should go to your risk, your big risk first. And we've dealt with that this morning. We have a long-term bull put spread on UNG that's working out well, very well. We're approaching 10%. We need 3 cents. We're about 6 cents to buy the spread back. You could buy it. Just look at the ask price is 32 and 26. That's 6 cents mid price roughly. So we're about 3 cents away on pulling this one off for 10% of max profit. So that one's working out well. The others that I wanted to focus on a little bit, and I have a scanner that I built, and it's looking for iron condors. Where's our Newmont trade? There it is. This is one that I did on August the 1st. And then Matt did a couple others. This is the Iron Condor on Newmont Mining. I like these on stocks that have taken a haircut, you know, been battered down like this one. We placed it right about here. Stock has collapsed, hanging out above the low of the day. It hasn't really breached that yet. The stock's moving sideways. We've already made some money. If the stock runs up, you know, tighten this spread, pull up this winning credit spread to butterfly. A lot of adjustment opportunities using these double wide iron condors. So that one's working. The one on Apache. I mean, these are, you know, more and more I like these better. You can put broken wing butterflies above and below right off the bat. Detach. We looked at Newmont already. And then we've got United Health. Looking great. We're at resistance. We just got filled on that butterfly. Let me grab that real quick. Yeah, we did. Okay. Let's go to monitor. Fill, we got filled at what? Well, that's probably not a fill you could get on a live market, but we got 8. I'm going to track it at 8. So we've got the 490. Let me find it first, so I'll forget. Make sure I got the right one. 419, 414, 408. Yep. September 9, 490, 365, 248. 490, 365, and 248.
Mike, did the XSP price change a lot this morning?
Well, that was the mid. I placed it at the mid price at the data that was in the simulated environment anyway. And XSP is kind of hanging in there at the moment.
Okay, it's just $1. I was just
Yeah,
wondering if that affected the price.
Yeah, I think it going up did. Yeah, that's probably what happened. So this is a BW. Oops. Let's save it. This is a BWB bear hedge. This is for the rut. Now, so we've now surrounded the rut, battening down the hatches. We'll see. I'm going to wait. I want to wait it to the close today. If we get another close above the 200, then batten down the hatches. But right now, let's see what the rut's doing. Must be up a bit. No, it's down. It's still contending with the 200. So let's let it contend. Let's react. Our reaction point is, I would say, a higher close. So on Friday, we closed at 2016.62. So a close above that. You might even get a bit more. I would say let's get a little bit more liberal and wait for a close above 2020. That's a round number. It's about 9 points higher than the 200-day average. So I'm going to let it do what it's going to do here. I've got broken wing butterflies above, one below. So we've got it checkmated. Then moves anywhere. We're going to make some money on the on a broken wing. And our credit spread, if this thing drops from here, our credit spread will give us our 15% profit or whatever it is.
Do we have a share on your folder?
No, but I'll do one. I'll share the.
Thank you.
Yeah, I'll do that. Yeah, absolutely. I'll give you a share key, and then you can copy it into your own accounts. Let me copy the trade that I just did. That's it. Okay. So that's in the feed, in the sniper feed. Okay. Now, when you, and all the other Iron Condors are doing great. All right. So if you like this strategy, then I would say, please go back and test it. So to make it easier for you to test, what I did yesterday, I realized I'm a trading geek. I didn't even take the full day off. I couldn't resist. And so here's the idea that I want to share with you. Let's go find stocks that have tanked. Stocks, charts, I'm sorry, stock rankers, closed percent change, bearish. Let's go to today's date. Okay, now we have data. Data for today. Let's see, 8:15. Yes. Let's look for bearish stocks over the last 2 days. All optional stocks and indices. Search. Let's get the biggest train wrecks. I like 10% is kind of my line in the sand. Let's take the top, I don't know, let's just take the top 75. Save them in my stock list. And now from here, if you wanted to look for bearish credit spreads, you could go to Tom Searchers, hedge fund mastery, grab call or put credit spread. Most likely you would do a call. And that's going to give you these longer term trades. You know what it does. And so you could do it manually. You run this scanner against the train wreck stocks. Let's find my stock list. There it is. So let's do bearish long-term out of the money call credit spreads. If the stock is tanked, there's reasons to suspect that it's going to have some trouble rising, and none came up. So and that's just the case for right now. There's none that's come up. You'll see some normally. Now, when you get one though, let's just do a quick example. Let's just do all optionables. So when you get one, the idea is if you like to trade, let's just do one as an example. I'm not saying I like this one. Earnings is tomorrow. Let's do this one on Oxy. Probability of profit isn't 80% either. So I'm not excited about this one at all. But the idea would be that once you have your short strike figured out, stock's at 63, let's call it. The short call is 12 points higher. And that's where that call is. And so what you would do is take the same distance, let's call it 12, subtract that from the 60, 63, and that gets you down to, let's just call it 50. And so you'd edit the trade and then sell the 50 put. And what's our expiration? Our expiration is October 21st. And then I'm going to see what my strikes are down there for October 21st. That's below 50. October 21st, 50. I've got 2.5 point strikes. So I'm going to do the 45 underneath. And then, of course, I want 2 strikes above here. So this would be 80. And now what I've done is I took the spread right out of the scanner, and then I added another underneath. Get my buy and sell correct. And so now I have an Iron Condor where the strikes are equidistant from the stock. Double wide, all the adjustment opportunities I've spoken about before. So that is a little arduous, let's say. And so what I decided to do is use the searcher in Tom's tools, the single searcher called Condors. Searchers, single strategy, Condor. And then I built a set of parameters that will give you iron condors that are wide, similar data that's used, although it doesn't really look for probability of profit. It's not got the same bells and whistles, but it is a good way to get a starting point. And what I'll do is, I can do this quickly. I'll share these settings right on the in the thread, and then I'll see if I can give you this wizard when I do my share key for everybody. So let me post this really quick here. Okay, so when you do this, you go into your, you could take any, you've got at the money iron condors, and then what you do is you come in and you can alter these parameters and then save it as a new wizard. And that's what I've done. And these are the settings that I've saved already. And so now when I come into the scanner, I say, all right, well, I want my wizard settings for long-term iron condor. And then I click load, and that gives me the settings. And then all I do now is go after my stock list, the train wrecks, in other words.
Mike, could I throw something in on this? I was looking at a video this morning about that, and the suggestion was not to mess with a wizard, but to go to the none and then change the settings on that. Is it possible to go to none and then save it as that, so you don't permanently alter the original wizard settings?
Well, you don't, because like right now, I could go to none, and then the settings are now changed. So
Okay, so your new saved wizards, that wouldn't affect the original ATM Iron Condor wizards?
No.
Okay,
No.
cool.
So all you got to do, yeah. So all you do when you want to run your wizard settings, let me just show you. So for example, I'll just change this one to 30. I can review the settings with you as well. So I'm going to just call this one garbage. It's going to change stuff. So whatever I've changed, and then if I want to save it, then I click save. And so now when I come in, you're going to have none selected. And you're going to, wait a minute, I want my garbage settings. You select garbage, load, and now your settings. You can have any number of wizard criteria here that you want.
Okay.
So let's load this long-term iron condor scanner. And then I'm going to go after, we could look at farm as well, but let's go after my train wreck list and hit search. And only one's come up on the screen here. Probability between break even 60. Now your probability is going to be less than 80%, most likely. So if I grab this one, I mean, nice. This is crude. So of course you want to have a prognosis about what the stock's going to do, but that's a nice little way to go after, for me, train wrecks. I really like the Newmont trade that we did, the first Iron Condor we did. Let me pull it up here quickly. There we go. So this one on Newmont. Stock that gets hammered, the beatings have been accomplished. The stock has been adequately, let's say adequately punished. Less likely that the stock's going to go bouncing around if it's really taken a big hit. You know, Snap is a very good example of what can happen. Find stocks that tank big. Here, sideways. Here, sideways. Netflix is another. Well, this one has recovered a bit, but for a good, few months sideways. So that's the idea. I don't see any light for today. Let's do pharma real quick here. Really, J&J is the only stock that's been punished for the talcum powder lawsuits. And it is it's having an inside day. So that could mean that stock's going to go sideways. I give it a few more days. The thing about lawsuits is when they get settled, things can move. Anything that's so sensitive to news, there the judge says, it's not, it's frivolous, and then J&J takes off. So you got to be careful with news-backed. Not all news, but certainly income-related news is big. Product-related news is big. They are dumping their talcum powder products, baby powder products. And so that's going to have an impact on revenues, and that could keep the stock contained down here. Let's just run it with this Iron Condor researcher and see if there's anything on Johnson & Johnson, just for the kick of it. Here's what it's come back with. 64-day trade. Highest 80% probability of profit. Max profit 11%. That's not a bad looking condor right there. Slippage extraordinarily wide at the moment. You see that? And slippage is way too wide to do anything with it, but something to consider. Well, I've got a surfing lesson. I've got my second one. So I'm going to pause for now and open the floor for any questions. Anybody got questions or comments about any of this that we've covered today? It's been quite a lot of information, but any questions, comments?
No, it was
I
great.
just want to thank you, Mike. That was really, really interesting and a whole new way of looking at things. I really appreciate it. This is such a great group. Thank you. Thank you.
Yeah, it's good to have you, Kathy. Thank you. Thank you for
I'm
your
gonna be
kind words.
watching.
They always touch my heart. Thank you.
I'm going to be watching this recording a couple times.
You're making it up as you go along. Anybody Monty Python fans?
Sure.
There was a Life of Brian is my favorite, and there was a scene where Jesus was speaking, and then one of the ladies sounded like my auntie Kath used to sound like this, and Jesus is speaking, and she goes, "Speak up! I can't hear a thing." She's yelling at Jesus, and then somebody else said, "Oh, you're making it up as you go along." That's where I got that. Welcome to my crazy mind. All right, everybody. Well, good call. We'll have hedge fund tomorrow at 3 p.m. Eastern. Lots going on there. Lots of good stuff. So we'll come up with some good trades. And I'm really leaning on broken wings at the moment. So we'll look there, see what we can find. Let me check our portfolio real quick here. I was doing well. It's doing real nice. I say that, but I haven't checked it today. Yeah, well,
Whoops.
when you look at that, and then you look at credit spreads, there's some information there. Right now in this market, credit spreads have been a pain in the butt. So we're doing pretty well, pretty much across the board, except for 3 of our long-term credits. Everything else is working fine. But here, with broken wing butterflies, oh my God, we're losing $1. That's going to be a profit, by the way. We're not losing anywhere. We're not losing anywhere with broken wing butterflies. Imbalanced. BITO on Friday expired. I'll tell you about what I did with this because I've traded this myself. but Bitto, let's go back to this, to expiration, which was on Friday. It expired right on the sweet spot. The whole thing expired. Stock was just below 15. The whole thing expired for max profit, 17% on what was originally a regular butterfly. So that's it. You know, you look at this world. Pretty easy to be detached because you're winning. And then you look at this world, it's all great except for one really big hot spot. And we're going to manage it. We're going to street fight this thing and we're going to be fine. But, you know, better or better, better or better. That's a subtle, maybe not a subtle, but a, you know, a call to lean on broken wings, at least right now, for sure, right now, if not always. Okay, everybody, good call. Love you all. Have an awesome day, and we'll see you tomorrow.
Cheers.
Pura vida. Hasta luego.
Recording